Ladies and gentlemen, good day and welcome to the H2 FY22 and financial year earnings conference call of Knowledge Marine and Engineering Works Limited, hosted by HAME Securities. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question at any time may enter star and 1 on their touchtone phone. To remove yourself from the question queue, please enter star then 2. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Astha Jain from HAME Securities. Thank you, and over to you, ma'am.
Thank you, Rochelle. Good afternoon, ladies and gentlemen. Thank you for joining H2 FY22 and financial year 2022 earnings conference call of Knowledge Marine and Engineering Works Limited. Joining us on the call today are from management team Mr. Saurabh Daswani, Managing Director, Mr. Sujay Kevalramani, CEO, Mrs. Kanak Kevalramani, Director and CFO. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature. The actual results may vary from these forward-looking statements. I would now like to hand over the call to Mr. Saurabh Daswani to commence by sharing his thoughts on the performance and strategic progress made by the company. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. It is my pleasure to welcome you all to our first ever earnings conference call. I hope and wish that you and your family are doing well during these tough times of COVID-19 pandemic. I would like to thank all the stakeholders, clients, board members, our bankers, auditors, our vendors, and the whole team of KMEW for the support provided during the last year, which has enabled us to come out with flying colors. Moving further, our financial statements, press release, and presentation have already been live on Exchange and our website. I hope you all had the opportunity to peruse the same. Before we get into the performance during the year, I would like to take this opportunity to give some background on the company for the benefits of all the participants. We at Knowledge Marine and Engineering Works Limited are in the business of dredging and hiring of marine craft for various essential services to the major and minor ports across the coastline of India and neighboring countries. These essential services are including and not limited to pilotage, security or patrolling as per ISPS compliance, mooring of vessels on the jetty and SPM operations, and also repair and refit services. We are one of the most reliable dredging companies in India, having presence in the eastern as well as on the western coast. Our geographical presence expands all the way starting from Kandla Port in the western India to Kolkata Port in eastern India. Coming on the essence of this conference call, that is financial year 21-22, the company continues to maintain a strong order book of 182 crore rupees with average tenure of more than 3 years. This gives a clear visibility of growing revenue and profitability in years to come. Discussing about the execution of the projects, the company not only continued to successfully execute its ongoing work, but also added up to executing 3 more projects in Visakhapatnam, Kandla Port Warina Terminal, and an overseas project at Sitwe Port of Myanmar. On our fleet strengthening, we have continued to invest in new additions totaling into 8 vessels as against 4 compared to last financial year. These additions have been as follows. First, River Pearl 5, a high-speed petrol launch made of aluminium and deployed at Visakhapatnam Port for a period of 5 years. River Pearl 6 and River Pearl 7, 2 sister vessels, which are mooring boats, deployed at Kandla Port Warina Terminal to handle the mooring operations of VLCCs arriving at the liquid cargo berth and single-point mooring systems. And River Pearl 8, a 1700 cubic meter trailing suction hopper dredger, deployed at Sitwe Port in Myanmar for carrying out the capital and maintenance dredging of the port and Kaladan River. It gives me immense pleasure that continuing the growth trend, we have 2 more vessels under construction which will be ready and in operation by the end of third quarter. These will include River Pearl 9, a speed patrol boat to be deployed at Visakhapatnam Port Trust for carrying out patrolling operations under ISPS compliance, and River Pearl 10, a service boat to be deployed again at Karna Port, Varina Terminus for the daily routine operations at the single point mooring in offshore. We believe that the last financial year has been a landmark year. This year, in which we have not only doubled our fleet, but also have been able to secure the largest dredging project for the company since our incorporation. The said dredging project is also our first international contract wherein we got the opportunity to assist the government of India to build a strategic port at Sittwe, Myanmar. The project is a collaboration between India and Myanmar to strengthen the relations of the bilateral trade and, more importantly, to provide the connectivity to the northeastern states of India. Adding some light on the future plans and the growth perspective, I would like to convey that the Indian port infrastructure is expected to grow in long term, thereby spurring support industries such as dredging and chartering of marine crafts for essential services. Also, the immense growth in the marine infrastructure facilities, including sealing bridges, metros, and whatnot requirements for marine infrastructure unit has gone up by several folds. With a serious focus on project timelines, our company considers the emerging opportunities arising out of the Government of India's new policy initiative for improving the port and marine infrastructure as promising. Our future outlook is bright, and with full order booking and with numerous more projects on horizon, our medium to long-term growth story is supported by our strategic plan to diversify into new business segments like shipbuilding, ship scrapping, and developing fishing harbors. Talking into detail, the company is in discussion with a reputed shipyard at Goa for setting up a full-fledged shipbuilding segment for not only the in-house requirement, but also to cater the increasing demand of marine crafts and marine infrastructure. The board is also discussing with other small dredging companies to join hands for emerging opportunities for development of inland waterways and fishing harbors across the coast of India. Such joint ventures will give an inorganic growth to the company and will place it in one of the very few companies giving an end-to-end solution in the field of dredging and marine crafts. Our prudent investment decisions during the last few years in new vessels and technology has not only achieved their project objectives, but has put us in a prominent place in this segment. This has helped us to spread our strengths across the geographies and compete globally. The long-term vision and the path to a sustainable future are constantly at the forefront of our mind space. I will now hand over the call to Mrs. Kanak Kevaramani, CFO, to take you through our spectacular financial performance during the last year. I once again take this opportunity to thank everyone and be a part of our growth journey and wish you a good health.
Thank you, Saurabh, for the introduction. Good afternoon, everyone. I would like to thank to all stakeholders for their support, guidance, and mentorship. Concentrating on our financial performance, our operational revenue rose to rupees 61.6 crores, which is 84% up in financial year 22 as compared to last year. Similarly, EBITDA saw an uptick of rupees 32.9 crores with a margin of 53% in financial year 22. PAT stood at rupees 20.9 crores with a margin of 34% in financial year 22. The total cash flow from operation was rupees 34.6 crores with EBITDA to CFO conversion of 105%. Coming to the debt structure of the group, I would like to inform that we structured our debt on the tenure of the contract. That is, we repay our debt before the completion of tenure of any contract. This debt consolidation has resulted in lowering of cost of debt to 7.5% from excess of 15% earlier. Our ROE and ROCE stood strongly at 53 and 50% respectively. Our net debt was rupees 3.8 crores in financial year 22 compared to rupees 5.4 crores in financial year 21, and net debt to EBITDA was 0.12x compared to 0.41x last year. Now I would like to highlight the contracts awarded during financial year 22. Firstly, we acquired, modified and deployed trailing suction hopper dredger River Pearl 8 in Sitwe Port, Myanmar under Ministry of External Affairs, Government of India as our principal contractor. Secondly, we have successfully won a contract of rupees 2 crores from Vizag Port for providing patrolling services under ISPS compliances for a period of 3 years, which is further extendable by 2 more years. We have also awarded a contract by Deen Dayal Port Trust for providing marine service boat for rupees 10 crores for a tenure of 5 years, further extendable by 2 more years. To conclude, the excellent financial year 22 results will serve as a new benchmark for us, motivating us to seek out new business opportunities and give a positive outlook and very optimistic view for good performance in financial year 23. With this, we close our opening remarks and will now hand over the call to Mr. Sujay Kevalramani, CEO of the group and the moderator, and open the call for an interactive Q&A session. Thank you very much.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Avinash Gorshekhar from Profitman Securities. Please go ahead.
Yeah, good afternoon, everybody, and congratulations on a very good set of numbers to the entire management team. I just wanted to know what is the current order book as of now, and what kind of completion ratio can we expect, in the current year, that is for FY22-23. So management can put some color on that.
Good evening, Avinash ji, Sujay here. So order book as of today stands at 182 crores. And we will be executing for this particular year about 125 to 130 crores.
Okay. And basically, just one more question which I wanted to know is that, you have mentioned in your opening remarks, I think Mr. Kanakji said that, you are looking at bigger investments by setting up your own shipyard or, trying to tie up with some other agency where you can possibly also manufacture, shipbuilding for others also. So, if management can briefly tell us what is the kind of expansion which, the company has in mind, and hopefully can this be materialized over the next, say, 12 to 18 months? I mean, can you share some timeline when this is going to be possible from the company side?
Sure. So there are 4 different angles on which we are working right now. One is shipbuilding. So we have been placing orders with a yard in Goa, Synergy Shipyard Goa, over the last 3-4 years to supply us and build crafts for us, which are for captive use. Now, we feel that there is a larger market, and we are trying to set up a JV company with Synergy Shipyard, wherein we will be bringing orders, in-house orders as well as external orders, and we will be developing that company further. That will materialize within next 3 to 6 months.
Okay.
Second, we are a dredging company. We use hydraulic technology such as trailing suction hopper dredgers and mechanical technology such as grab hopper dredgers. We are not currently in the segment, and we do not own cutter suction dredgers. So we are inorganically trying to grow into that by doing a joint venture with a company which owns 4 to 5 cutter suction dredgers. that joint venture is going to be incorporated very soon. That will also happen within next 6 months, and we will try to expand in the sector of cutter section dredgers and take up orders from inland waterway. That is second. Third, we have been working for majorly port sector, wherein we are catering to shipping vessels. Now we are trying to expand, wherein we will grow into fishing harbors as well. Government of Gujarat is having a large push for developing fishing harbors, and we have made certain bids for that. So that is the third thing we are concentrating on. And the fourth one is that we are trying to do a joint venture wherein we can become cash buyers for scrapping vessels, and we will be doing a cycle from building to completing it to scrapping it. So all four things will be compiled in that. These are the four different angles we are working on right now. The fourth one will materialize within a year.
Okay. Just one small question to add to this, sir. I wanted to understand in this entire, plan, this four-stage kind of plan. What is the kind of capital expenditure does the company envisage? How much capex is the company likely to spend? In a very approximate manner, in the time frame, you are planning, for all these activities.
So we have chosen the joint venture route in order to avoid the capex that is usually required to start these ventures. The shipyard already exists, so we will be using the facilities of the shipyard. It is a 50-50% joint venture, wherein we will be bringing the orders for the shipyard. So the capex will come in only post the order is there, and so there is no initial capex required to set up a shipyard. Secondly, for the cutter section dredgers, the company with which we are doing a joint venture and opening a subsidiary is also having the cutter section dredgers. So we need not spend any money on acquiring these cutter section dredgers. We will be deploying those cutter section dredgers by getting orders from Government of India. Similarly, with the ship scrapping yard, the yard already exists. We are doing a joint venture wherein we will add value by bringing in vessels for scrap. And fourth, fishery harbor is a dredging tender wherein we already have a joint venture partner, Sahara Dredging, with which who already own the equipment. So we will be doing the work jointly, for which we have also done a work jointly for Myanmar right now. So there is not a large capex required for any of this.
Okay, so I think this entire activity and strategy, sir, is very properly strategically planned, because if there is no capex, then we can definitely expect better kind of asset turns. If your asset base is small and your revenue kicks in from the new orders, then hopefully I think the management would probably like to get incremental revenue at a very low asset kind of construction cost. So is my thinking right?
That has been our strength, sir. For the last 7 years into existence now, we have tried to keep our capex low, and we have tried to have higher margins. So what you are thinking and saying is correct.
And as far as the employee strength is concerned, sir, will you require some more people to run all these ancillary, these businesses? Like, will there be some OPEX cost, also which will come on your profit and loss once these projects, actually are backed and, actually the revenue starts building? So typically in a contract, just to give a simple example, if you get a 100 rupee contract, what would be the employee cost roughly? Like, what could be that cost as a total cost of the contract?
Employee cost usually does not exceed 5% for the whole contract value.
Okay, and I was just wanting to know that what could be the kind of margins you guys would be enjoying, because already you people enjoy a very healthy profitability margin. So if you don't have any capex cost and even the OPEX cost is not very high, I think employee and fuel cost are the only two cost elements. Please correct me if I'm wrong. So in a very very broader sense, can we expect the same kind of margins to come from these incremental contracts going ahead?
Sir, the contract that we have on hand, Myanmar contract, was an exceptional contract. Going forward in the future, we aim to have such contracts, but margins may not remain the same. There may be a dip of about 5%. That is what I believe. Also, different segments have different margins. The shipbuilding segment has 20% margin. The dredging segment has 50% margins. So it will vary from business to business.
Okay. Anyway, I think, Sujay, thank you very much. If I have any further questions, I'll come back.
Thank you, Avinash.
Thank you. Ladies and gentlemen, before we take the next question, we'd like to remind participants that you may enter *1 to ask a question. Our next question is from the line of Shubham Jain, an individual investor. Please go ahead.
Thank you, sir, and congratulations for the fantastic number. Sir, I just want to know about our revenue guidance for the year FY23. Can you just mention some figures for the same?
Shubham ji, welcome. Revenue for the year 23 will be in excess of 100 crores, 125 crores.
Sir, is that for total of FY23, right, sir?
Yes.
Okay. Thank you, sir. And my second question is about the sustainable EBITDA margin. So what would we expect for the sustainable EBITDA margin around for the year 23?
We always aim to have an EBITDA margin of at least 40%, sir.
40. Sir, right now we are having 53%. Am I right? For a year, around 53%.
That is true, sir. We had an exceptional contract from Myanmar Port Authority. We choose and pick and bid for contracts wherein the threshold is 40%.
Oh, okay. Thank you so much, sir. Thank you so much. That's it from my side.
Thank you. Our next question is from the line of Rajesh Singla, an individual investor. Please go ahead.
Hi. Thank you, sir, for taking my question. So for the next year, you have been guiding for 100 to 120 crore revenue. And what kind of margin we can expect in FY23?
Rajesh ji, welcome. Our margins will be approximately where we stand today. They will not reduce because the Myanmar contract continues.
Okay. And what is the possibility of getting Myanmar-like contract in the future? Because it seems like you will be growing at a very, very strong pace in coming years. So what is the probability of getting Myanmar-like contracts in the future? Which can keep our margins above around 40 to 50%.
Yeah, the probability is high, and we aim for such contracts only. But the thing is that we keep a threshold of 40% at EBITDA. We don't go below that.
Okay. And maybe last question from my side. So what kind of competitive environment do we have in this business given such a healthy margins? So do you face any major competition in this business or the competition is not that great, that's why the margins are quite high? So what basically leads to such a high margins in this business?
So the job, Rajesh, the job is not very easy. It requires a lot of skill. Also, like you said, the competition is not very high. The large players are Government of India, Dredging Corporation of India. There are players from Europe such as Van Oord, Boskalis, Dredging International and Yandenal. They choose to pick contracts which are usually above 150 crores. So there is very minimalistic competition for contracts which are below 100 crores.
Okay. And are you targeting like 100 crore kind of contract in the future to enter into that basket?
We are currently having 200 crore contracts, one from Calcutta Port and one from Ministry of External Affairs. Now we are targeting contracts in excess of 150 crores. Also, we will go for contracts which are 100 crores, but we are trying to grow, so we are targeting contracts in excess of 150 crores also, because we have got the qualification for that.
Okay. Thank you, sir. Thank you. Best of luck to you. Thanks.
Thank you, sir.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question. Our next question is from the line of individual investor Dharma Venkatesan. Please go ahead.
Good afternoon, sir, and thank you for the opportunities and congratulations on a great set of numbers.
Welcome, sir. Welcome.
So I'm just new to this company, so I have some basic questions. So just pardon my ignorance. So what is if we are 10 fleets? So what is our life of a single fleet or average life of each fleet which we are having?
Sorry, sir, you are inaudible to us.
Sir, Mr. Dharma Venkatesan, may we request you to please use your handset if possible because your audio is muffled.
Now it's clear? Now it's better?
It's better, yes.
Yeah. Sir, we have around 8 fleets which are already in work, and we have 2 fleets which are being built. So I would like to know what is our average lifespan of a single fleet. Does it vary based on its work, or what? I would like to know a rough number of what is an average age of a fleet.
So the average age of a vessel is 15 to 20 years. depending on how you maintain the vessel, sir.
Okay, sir. And currently, we have an order book of around 180 crores. So how much order book are we in negotiations with, and what is that strike rate generally for any order which we are competing?
So we have made bids in excess of 250 crores right now for the current and the next 2 years.
Okay. And what is our win rate generally? Like
the hit rate is in excess of 50%, sir.
50%. And what is the approval period for each fleet, sir? Like generally?
I'm sorry, sir, I couldn't get that.
What is the payback period of a fleet which we generally build?
Sir, less than 2 years.
Less than 2 years. And does the company have any plans to move from SME to main board, or is it something the board will decide at a later point?
Sir, the minimum requirement is 2 years, so surely on completion of 2 years, we'll take board approvals to move to the main board.
Okay, sir. And do we expect any any kind of debt increases in the coming quarters? As you previously mentioned, we are mostly doing joint ventures. So there shouldn't be much increase in our debt portions, right? Or there will be slight increases?
There is no plan to increase any debt in the next quarter. Actually, it will only decrease.
Okay, sir. Okay, fine. Okay, sir. Thank you very much for your answer. If anything, I will come back on this.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question. Our next question is from the line of Rajesh Singla, individual investor. Please go ahead.
Hi, sir. Thank you for taking my question again. This is regarding, so next year we are looking at 100 to 120 crore kind of revenue. So can you guide us a bit about the medium to longer term? So what are our aspirations? So can we reach, say, 500 crore kind of revenue in next 4-5 years? So any insight into that?
Sir, that is the target. We started with smaller contracts of 10 lakh rupees. We were very happy when we got our first contract for 10 lakh rupees in 2015. And when we made about 90,000 rupees from it. So at that time, we were having aspirations to reach and make this company a 1,000 crore market cap company. And we've been moving on to that path. So surely we are aiming and moving towards that, sir. So 500 crores is something that we should target by, and we have targeted by 2025, sir.
Excellent, sir. Excellent. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question. Participants who have a question may enter *1 now. We have a question from Avinash Gorshekhar from Profitmart Securities. Please go ahead.
Yeah, I think just one question which I wanted to ask again, just to enlighten my knowledge. Sujay, can you give some color on the overall opportunity size of the market? Like, you all are present in prominent ports as of now, plus now you all are thinking of diversifying. From the port opportunity, what could be the opportunity size for you over the next, say, 3 to 4 years? So, obviously you all must have studied the market and you must be knowing what is the market opportunity. So if you can give some color on that, like where are we placed today and what's the market size presently, and what kind of opportunity is there for you to grow in this market?
Sir, our small craft vertical market size with port sector is about 500 to 550 crafts that the ports require to operate. These 550 crafts offer various kind of services to the port. We presently have 6 crafts that we have offered out of 550. So the market size is very high. That is only on the Indian East and West Coast ports. Now, world is the market. We can expand into that. Secondly, in dredging, I will term it in terms of rupees. The maintenance dredging market is in excess of 1,200 crores per annum, and capital dredging market is in excess of 2,000 crores per annum. This is just the port sector. Then going into the rivers, inland waterways, other naval contracts, PSUs, that is another about 1,200 crores. So the market size is close to about 5,000 crores per annum, out of which we have only grown into about 100 crores per annum right now. So we are nowhere there. We are very small. When it comes to shipbuilding, again the market size per annum will be in excess of 5,000 crores in India. world is the market. We are building ships worth less than 10 crores per annum. We are very small. When it comes to ship scrapping, again, a very huge market. We are just starting into it. Fishing harbors, we are just starting into it. The market size is in excess of 1,000 crores. So we are just beginners at this. So, I mean, we can't be compared to large players or anything like that in the market. So market size is very huge. We still have to grow a lot.
Yeah, Sujay, just one thing I wanted to understand from your answer that, you mentioned something called capital dredging. If you can please explain me, because I'm not a technical person, if you can tell me what exactly does that mean? Does it, is it some different kind of concept in dredging, capital dredging when you mentioned?
Sir, when we dredge for the first time, when there is virgin soil, let's say we are constructing a greenfield port for the first time, the first time you do excavation is called capital dredging. Once you have achieved a certain depth, let's say you achieve a certain depth of 10 meters, you are required to dredge to 10 meters to create that port. 5 years from that period or 2 years from that period, the port wants to grow and bring in bigger vessels and wants to deepen it from 10 meters to 12 meters. Again, then when you deepen it from 10 meters to 12 meters, that will be called capital dredging. Now, once this port is established, every year due to natural phenomenon of tide and currents, silt will come and get deposited. So that 10 meters will get reduced to 9 or 8 meters. And every year, annual maintenance dredging, the silt that has got accumulated gets removed. So whatever dredging is done annually to maintain that depth of 10 meters is called maintenance dredging. And the first time that you did dredging to achieve the 10 meters is called capital dredging.
Okay. Yeah. Thank you. Thank you, Sujay.
Welcome, sir.
Thank you. Our next question is from Prashant Sisodia, an individual investor. Please go ahead.
Thank you for the opportunity. My question to the management is, apart from Dredging Corporation of India, who are the company's key competitors?
Welcome, Prashantji. In the small sector, there are players such as Sahara Dredging, Rock'n'Ree, Samudra Dredging. They pick up contracts worth 5 to 50 crores. In the large segment above 100 crores, there's Dredging Corporation of India, Vanord, Dredging International, Yandenal, and Buscalis.
Okay.
Now we have seen lately Adani also participating in these dredging contracts.
Okay. So, like among our competitors, what is our key strength in like above 100 crore?
About our key strength is to keep our capex low. We have the strength. We started as a company which can do repair works to any vessels. Initially in 2013, one of our companies that we established, we have a core strength, a team of about 40 people which can repair any kind of vessel. So we keep the capex low. For this Myanmar contract of 117 crores that we got, our initial capex was 5.5 crores for a vessel that we bought in scrap from Government of India. We spent about 15 crores to develop the vessel. So the same will, if our competitors go and buy from the market, they will get in excess of 100 crores when they get a new build. So we have that strength of picking up an older vessel, repairing it, and then getting it to work. So our capex is very low, so the competition doesn't stand a chance.
Okay. So like my other question is, among our what is our market share in this business among our competitors? Like, are we all having approx same market share, or we have any competitive advantage with that?
Sir, Dredging Corporation of India has a high market share because they get a lot of work on nomination basis from Government of India. Our market share in maintenance dredging is less than 10% right now, and in capital dredging it is less than 2%.
Okay. Okay, thank you.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question. We have a question from individual investor Rajesh Singla. Please go ahead.
Yeah, hi, sir. Thank you again for the question. Can you please let us know, or maybe throw some more light into the margin trajectory? So if you look at the Dredging Corporation, their margins are not that sustainable, or they are like quite very, very volatile. So how are we different to them in terms of the business or the market size, or in terms of the way we are placed in the market, or the capital spending? So anything which you can share, why we are able to generate better margins than Dredging Corporation of India, which is like very volatile margins.
Rajesh, Government of India takes a lot of time to take decisions. First of all, time is money for any shipping or dredging company. So their vessels going into repair or dry dock or conversion or upgrade facilities usually take a minimum period of 6 months, wherein we do that repair within 3 to 4 weeks. So rest of the time our vessels are deployed and earning and making money for us, wherein that is a downtime for them. They have a usual period of downtime every month of more than 5 days, 5 to 6 days. We find time during the day and night. We have a difference which do our regular preventive maintenance, breakdown maintenance. So we have lesser downtime as compared to them. There, over our employees, we have about 10 employees carrying out all the operations. They have more than 80 employees carrying out the same operation. So their overheads are much higher than us. So these are the reasons why, for which, their margins are low.
Okay. Thank you, sir. Thank you very much. Thank you.
Thank you very much. Ladies and gentlemen, that was the last question. I now hand the conference over to Ms. Asta Jain for closing comments.
Thank you, sir. On behalf of Hames Securities Limited, I thank Knowledge Marine and Engineering Works Limited team for responding all the queries in detailed way. I would also like to thank all the participants for joining this call. I would now like to hand over the call to the moderator.
Thank you very much. Ladies and gentlemen, on behalf of Hames Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.